Hi everyone, my name is piterpakulski. Today we'll continue creation of financial model of a subscription business idea, and today it's time for us to create a cash flow statement. Cash flow statement is the heart of any business idea, because when the cash flow statement is built, we can finally calculate the amount of financing that we need to start the business. We can calculate the payback period, simple, discounted. We can see the structure of revenues, expenses. We can build different diagrams. If you find this video valuable, you will give us a like, subscribe our channel, share this video with your friends. You can write a comment, or you can order a financial model from scratch for your unique business idea. We can help you with that. So let's start building the cash flow statement. So cash statement is the almost 100% automized table. We don't manually put the inputs inside this statement. So we're starting with the revenues. So we are not putting the revenues manually, we just travel through the model and revenues which already calculated. We've marked them with green. Here they are.
Now we finally are moving them to the cash flow statement. Now extrapolate this formula to the right. Now we create the line for direct expenses. In our case, these are marketing expenses. So we're just scrolling down, searching for these expenses. They are marked with red. Sources of customers, so we're about to find them. Marketing expenses. Then we also have some direct costs, direct payroll, investment plan, and we also have other direct costs depending on how many customers we have at the moment. So as you can see, this cash flow statement is an automized story. We don't put manually any values inside this table because if we want to play with numbers, create different scenarios, this statement must be automized, because you can easily create numerous amount of scenarios to look at your business sales. So these are direct costs. I will group revenues. Data outline group. Then we take payroll. Payroll will consist of two types of payroll. The first payroll is kind of direct expense because it is linked to the amount of customers. Direct payroll. It is the first part of payroll. And the second part of payroll is a type of fixed costs. It is staged payroll. So now we extrapolate this formula to the right with payroll. So we are grouping direct costs, so the next block will be fixed costs. So here we have payroll, direct expenses, fixed costs. Now extrapolate fixed costs block to the right. Then we create block for taxes. So here we will place the taxes. So this will be the revenue tax. Profit tax we will calculate a little bit later. Payroll payroll is here. Asset tax we go up to the timeline to the correct block and find 0111 is here. Then we calculate the result from operating activity. So we take revenues minus direct expenses minus payroll minus fixed costs minus taxes. Then we move to investment activity. So here we have two blocks of investment. The first one is before. The first block is before we start operating activity, and second one is when we have the operating activity. So here it is. So we take a total of two blocks of puts. One is before, the second one is during the operating activity state. Then we calculate the result from investment activity. We take this value with the opposite sign, because the investment is in majority of cases is the outflow of capital. Then we group this block. Then we have equity, our money from the pocket. Then we have loan. Then we have principal payments. Then we have interest payments. This can be the input, so I mark it with our input color. This will be the result from financing activity. So this will be this plus this minus this minus this. Then we will extrapolate this formula. Now we'll calculate the profit tax. If this one minus this minus this minus this minus this minus payroll minus asset minus principal minus this is less than 0, then we pay nothing. Otherwise we take this story multiplied by the tax rate, profit tax 5%. So now we are taking cash balance at the beginning of the period, and cash balance at the end of the period. This is the end of cash flow statement. So we are taking the result from operating activity plus the result from investment activity plus the result from financing activity plus cash balance at the beginning of the period. Then we move this value here, it becomes the beginning balance for the next month. Then we just copy this formula to the right, and then we extrapolate to these formulas to the right again. So now our cash flow statement is ready. The next video will be devoted to calculating the amount of financing that we need to start the business. If you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. You can write a comment, or you can order a financial model from scratch for your unique business idea. We can help you with that. So see you next videos. Thank you and bye.